Let's talk about the dividend capture strategy. Is this strategy profitable? Can you make a lot of money through this strategy? That's what we're going to find out. Previously, I did a personal research a few years ago with the US stock market, but now I'm going to look into the Jamaica Stock Exchange and see if this strategy is one that is worthwhile. So if it's the first time on this channel, please hit that subscribe button, share this video and like. Anyway, let's dive right into the video. So I'm going to share my screen right now. Yeah. So the dividend capture strategy is an income focused strategy popular with day traders. In contrast to traditional approaches which center on buying and holding stable dividend paying stocks to generate a steady income stream, it is an active strategy that requires frequent buying and selling of shares, holding them for only a short period of time, just enough to capture the dividends. And the underlying stock could sometimes be held only for a single day. We know this is not possible in the Jamaica Stock Exchange because there's a 2.5, I think it's 2.5 days before a trade can be settled. So it's not really possible in the Jamaica Stock Exchange. I'm just putting that out there. But just the same, it's a strategy that can work or can be deployed in the Jamaica Stock Exchange. Now, dividends are commonly paid out annually or quarterly, but some are paid out monthly. Traders use the dividend capture strategy. Traders using the dividend capture strategy prefer the larger annual dividend payouts. So these traders tend to prefer like the large payout, the big special dividends and all of that. But I'm going to look at the 4 key points that you must remember for this strategy to work. So you want, and you will see below dividend timeline. At the heart of the dividend capture strategy are 4 key dates. Declaration date. The board of directors announces a dividend payment. This is the date when a company declares its dividend. It occurs well in advance of the payment. Ex-dividend date. The security start to trade without the dividend. So this is when this is the date that if you have the stock on a Tuesday and say the Tuesday is the ex-dividend date, you will not get the dividend payout. That could be all next week or incoming days. So date of record next. Current shareholders on record will receive a dividend. This is the day when company records which shareholders are eligible to receive the dividend. Pay date. This is the day when the dividend is paid and the company issues all dividend payments. Now that we have an understanding what the dividend capture strategy is, I'm going to look at 4 examples and see if it's really a worthwhile strategy. So first on my list today is Trans-Jamaica Highway. Now, Trans-Jamaica recently made a dividend declaration, and it is one of the larger dividend declaration in the market I've seen for some times. It's like in top 3. But now I'm going to look if it's a worthwhile for this strategy. So Trans-Jamaica Highway is now trading for a price of $2.90. That's today. Screenshot from last night, so maybe the price can be a little bit different, but yeah, we'll see what that goes. I'll explain everything. So Trans-Jamaica Highway declared a dividend, but guess what? Instead of looking at This is 2022 actually. So perfect. So here what? They are in, that's last year. I'm gonna look at last year and then this year. So last year in 2022, a dividend was declared, and let me see the dividend date. I see the X date, I see the other date. Let me go back. I think I had made a screenshot. Alright, let me just draw a screenshot. 2022, good thing I did it. So in 2022, September 30th, last year, Trans-Jamaica Highway Board of Directors held a meeting and they declared a dividend of 0.0855 cent per share. The dividend payment will be made on October 25th, 2022 to shareholders on record as at October 14. So, as you can see right here, the ex-dividend date is October 13. The announcement date was September 30th, but the payment will be made on the 25th. And only investors on record as of October 14th. So I don't know if you, but anyway, I'm going to draw you back through that in a moment. Maybe. Alright, so we're going to look back on the past year. So, the dividend was declared on September. The dividend was declared on September 30th. September 30th. Alright. So the price, my assumption would be is that the price would have been at $1.47 at the time of the declaration. But now remember now that the ex-dividend date is October 30, and it would be for shareholders on record of October 14. So you have to have the stock basically by on October 13 or 12, somewhere there. As I said, you have a time when the stock is settled. I know it changed last year to either half a day earlier, but don't quote me on that. So the changes from the stock by the time the dividend. So from the 30th, when you buy the stock at $1.37 to $1.47, that would have been a price. So after the price, the dividend has paid on the after the record date on the 14th, the stock would have fell to $1.37. $1.37 from basically $1.47. So when I look at that quickly, I realize that's 7 to 8% price depreciation when you calculate the price plus fees. So that's 7 to 8% of price depreciation. And when I calculate that dividend payment of 0.855, that's a dividend payout of around 6.1%. So really and truly, in this case, if an investor had buy the stock just for the dividend payout, they wouldn't really make any money in this case. But now I'm going to look at 2023 when the company decided to do a big dividend payout. So we can see it right here. So Trans-Jamaica basically, let me duplicate this. So basically, Trans-Jamaica declared a dividend on September 26. A dividend payout of 0.1866. The payment will be made on October 25th to shareholders on record as at the close of business on October 10. So you have to be on the record on October 10. That means you have to buy the stock from at least October 8. So we're gonna look now. So look at the chart. So basically, that's within the last 3 months. I actually haven't paid this dividend yet. So from the time of that declaration on September 26, the price has moved from $2.56 to now $2.90, and that is over like 11% up. So the price has appreciated, and when I calculate that dividend payment, that's around 7.2%. So far this dividend payment would make sense. This dividend capture would probably be profitable if you bought it right at $2.56. But remember now that there's a queue. So the queue can determine the price, and sometimes you have a range between the bid and the ask price. And so far we see where the dividend is 7.2% and price is up over 11% at least. So we know, say, yeah, it's possible you can make a money from this. But we're gonna look at the queue just to be sure. Alright, so look at the queue. When I was looking at the queue last night, I can see where the buy orders are pretty close to the sell orders. So as you can see, the volume is 4 million auto shares traded. 4 million shares, which is not bad. This is a well traded stock. And we see where the buy orders are pretty close, set 278 to 280. The sell are 281 to 285. So I can say it's safe to say that this could have been a profitable capture strategy if you get it at the right price. So yeah, I can see where out of the 2 cases of Trans-Jamaica Highway in 2022 and 2023, it's a 1-for-1. So 1 year it doesn't make any sense. This year it could have made sense. But we cannot use just these 2 cases to come to a conclusion. I'm going to look into 3 more cases and to rest my order. Alright, so the next stock I'm going to look at is Scotia Jamaica. Next stock I'm going to look at is Scotia Jamaica. Scotia Jamaica. So if you don't know, with Scotia now, they pay dividend quarterly, at least 4 times a year, based on what I'm seeing with them over the years. And Scotia Group Jamaica declared a dividend on, I think it was September 7th. I'm going to go on the document right now. So Scotia Group Jamaica declared a dividend on September 7, 2023. Be it resolved that a third interim dividend of 40 cents be paid on each stock unit. And stockholders on record as of September 27. And that was, so they declared that on September 7th for stockholders on record as of September 27th. So you know, so you have to buy the stock from at least September 25th. So we're going to look back at the trading for Scotia Group Jamaica and see how this would have went. So we see where dividend was declared on September 7. Price was at 33.05, and it's for investors on record of September 27. Which mean the price would have appreciated to 34.06. Yeah. So that's a price appreciation of around 3%. And the dividend payout was 40 cents. And when I did a calculation, that dividend payout is like 1.2%. Now we can see where the margins are very thin on this one. Dividend 1.2%, price increase 3%. Is 4% worth it? We're going to look at the Q. So looking at the Q is just to have a general understanding of the price trading for this company. So I can see where the price difference for Scotia Group is like $1. We could probably get the difference. The biggest difference is 32.50 to 33.50. I'm not sure of the exact Q at the time of that payment, but it generally seemed to be a $1 difference. No, this seemed to be, it seemed like it's not as traded as a Trans-Jamaica Highway, which is 4 million volume, compared to a 36,000 right up here if you can look at the volume. So it's possibly might not be worth it, because by the time you check the fees plus the the difference and in the Q, it might not be worth it, because you might just get a 1 or 2%. So it all depends on the price to get it to be sold at. So all that, and we can see right. Let me look back at the on the stock. So we can see we're on September 27, right after the dividend payout, the stock fell. The stock fell 2 days after to 32.50. So if you don't sell by one day, if you didn't get your stock sell, it wouldn't be a wise move. You would have lost money. So yeah, so you can see now we have 2 for 1. 2 cases where it don't make sense. 1 case is where you could have made something. So just to further the argument, I'm going to look back at 2 more cases and then we make a conclusion. So the next stock now I'm looking at is Dolphin Cove. So I did a video on Dolphin Cove last month, and what I realized was that one shareholder owned 80% of this stock, and another 2 or 3 more investors own like another 11%. So this is a tightly held stock. So I want to see, does that make a difference from the Trans-Jamaica Highway? Let me look. So they declared a dividend. They declared a dividend on September 5th. At a meeting held today, Tuesday, the 5th of September 2023, the board of directors declared an interim dividend of 40 cents, payable on Thursday, the 5th of October, and to shareholders on record as at Tuesday, 19 September 2023. So we're gonna see if this makes sense. So They declared a dividend on September 5th. The price was at $16.98, and for shareholder on record of September 19th. So we can see where the stock actually fell. So the stock actually fell 4%, and based off the calculation for that 40 cents dividend payout, it's a 2.3% dividend payout, but the stock fell 4%. So you see the net loss is bigger than the net gain. So in this sense, it doesn't seem to make any sense already. Probably I don't even need to look at the Q for this one, but I'm going to look just this year. So what you can see right here is that the sell price is $16.34, and the buy orders are $16.01. So looking at that, it doesn't make any sense. You would have lost money. The trading volume is just 1,000. So you can see the stock is barely trading. As I mentioned about the shareholders, 91% is owned by very few shareholders. So in this case, you see where it doesn't make sense. But I have one more case to look at right away, just to make a conclusion. Let's see where I don't want to put this argument to rest. So if a person is going to do this, they know that they're really gambling and they know what they're in. So I'm going to do Caribbean Cement. So at the 74th annual general meeting of the Caribbean Cement Limited, convened today, Friday, September 8th. On September 8th, shareholders approve a resolution that a final dividend of JM $1.89 per share and is hereby declared payable out of the profits of the company in respect of the year under review on October 6, 2023, with a record date of August 24, with an ex-dividend date of August 23. So what you can see right happened, what happened? This company, Caribbean Cement, declared a dividend, but it is in a past date. So you would have to be a shareholder on August 24th, but this meeting is in September 8th. So technically you could try it unless you were like, ahead of time. Unless you know ahead of time about this declaration. So in this case, we can see where the dividend strategy doesn't even make sense, because you would get the dividend anyway. So there goes my conclusion, basically. I don't even know if I need to look in the queue for this one, but I want to do it. We can see where you can see where the volume is also low on this one, 3,700 volume. Yeah, so I mean, it does out of the 5 cases you can see that look, dividend capture strategy don't work in 4 scenarios, and the one scenario that it seems to work is this current scenario for Trans-Jamaica Highway in 2023, which the dividend hasn't been paid yet, so we don't know what will happen after this dividend, after the record date is gone. But only 1 out of 5 cases we see where these strategies are really strategic. So conclusion I make from this, or I want to tell you, is that the more liquid a stock is, the higher the probability for movement based off a dividend announcement, and there's generally a high chance of losing more money than gain due to price appreciation and fees, and infrequent trading for especially stocks that have low volumes. So you have to be careful of the stocks that you even try this strategy on. So generally we see where if a stock is low volume, the stock doesn't seem to make any sense. Buying stocks for just dividend is not the best choice. It's not the best strategy. So I did dividend videos in the past, but I don't just do so dividend videos. I say, all right, I look at stocks that pay dividend but also expect growth. So that means say you will expect a little icing on the cake. The dividend is just the icing on the cake, and then you expect high capital appreciation. So that's what I normally do when I'm talking about paying dividend stocks. So if you enjoyed this video, please subscribe, stay tuned for more, and share this around. See you in the next one.